Hey guys, so happy Friday, and we're back once again with another update on what's going on in the Philippine market. So before I begin talking about the charts and give you sentiment, let me talk about a couple of things. First, the PSEI closed at 6,270.23 for today. It's down 3.48%, and this is a massive downward move by the index as a whole. We have value turnover of around 6 billion pesos for the day. And I'm sure you all know this, that this is all predicated on the announcement that we are having another ECQ type lockdown, which is happening from August 6th. And after that, for 2 straight weeks that we will be in lockdown. So please remember, this is something that's so significant because ECQ is similar to where we were in March 2020. And this is similar also to the type of lockdown that we had in March 2021. And please do note that the reality of this is that from an economic standpoint, this puts us again a step backward. As you all know, we've seen the lockdown happen last March 2021, where we saw cases start to spike up once again. Then we had to lock down, and then as we started to open up, the Delta variant came in. I guess the difference that we have right now, though, is that there's more people vaccinated. There's more people already who, at least I think 10% of the population has been, I think, either received the first dose or they have been fully vaccinated, which is at a better scenario than where we were in March 2021, and which is also a better scenario than where we were in March 2020. However, if we keep doing this, open, close, it won't be really good for the economy also as a whole. I'm sure also from a perspective of people are adapting, businesses are adapting, businesses are shifting. That's very true, and there are businesses also that are currently still thriving right now while all of this is going on. But for the economy to recover as a whole, please please do note that every time we lock down, that there will be industries and sectors that will be heavily beaten down as well. And in the same way, there will be industries and sectors that will continue to rise up and do better. But as a whole, the economy, I think this takes us a step backward. And please do note that this is all about the Delta variant. Excuse me, sorry about that. This is all about the Delta variant, the one that's very contagious, and we've seen a lot of cases already start to come out. And I think this is also a preventive measure to prevent further spread of the virus. And I think one lesson learned here also as a country is that once we start to open up, the whole narrative should be, we should still be careful. We should still practice social distancing, and as much as possible, um, maybe not. Maybe if until we go back to a point where everyone's inoculated and then the virus really isn't spreading as much. Um, Maybe gatherings or even meeting people that we're not really connected with to the house. I think that's where the cases get spread. But anyways, as you can see also, every time you see drops like that, it causes a shroud of uncertainty in the markets. And every time there's a shroud of uncertainty, investors try to stay out, or it gives them a reason also to take profits as well. And please do note that the whole narrative and goal of investors also is that when conditions are not favorable, it's okay for them to also stay in cash, because that's also the whole context of the stock market. It gives you bits and pieces of liquidity that if you don't want to be positioned yet, uh, it could be a way also for you to somehow get out, stay in cash, and then live to fight another day, or to be positioned again later to be able to buy some more. So I just want to mention this, that the highest that we've hit, we were around 7,000, and this was around um July 5, so it was just a couple of days ago. We're down 11.3% from the highest that we've hit at the first week of July. So Right after that, we've seen tremendous selling pressure. And above and beyond that, I want to zoom out first so we have full context of this as well. But I think, no, if one thing to watch out for is that over the next 2 weeks, how will things progress if we go back to GCQ right after, or if the lockdown is still something that will be relatively, we take it gradually again from ECQ, then MECQ, then way before we go back again to GCQ. If it takes a longer time again before we go to GCQ, then it may be harder for us as a whole, also as an economy, to continually push. So please remember that when we're in ECQ, there's no dine in, there's no retail. Everything will just be basically essentials, and everything will just be basically online also, and there will be a lot of activities that are not heavily connect that are leisure in nature, which which will not be there. And please remember this, that the lockdown is just in NCR, but NCR, in all intents and purposes, is still the largest chunk of is the largest contributor to the economy. What happens to NCR will greatly affect also the economy as a whole, because of the number of jobs and businesses that are here as well. Anyways, let's look at the chart first as a whole. So I wanted to zoom out so you have a grand context of this. Number one, I think one of the reasons why, above and beyond the Delta variant also pushing the markets lower, is that we did really progress higher, was from a technical standpoint. You see this resistance, we failed to break that particular resistance last July 5. So in all intents and purposes, regardless if there's good news or bad news, anytime a resistance is not broken out from, will warrant some selling pressure. Anytime a resistance is not, we fail to see it go above it and stay above it, we will warrant more selling pressure. And from that particular time that we failed to break out from the 7,000 level, several important support levels have been broken. Number one is the 20-day moving average, which is the red line here. Number two is the 6,818 support level, which also got broken. Then you have the 6,063.49 support level, which also got broken. Then you also have the 50 and 100-day moving averages, which all got broken as well. And also, if you're seeing it properly here, aside from the 2050 and 100, we also broke below the 200-day moving averages. So we are bearish for all the moving averages right now. But not just that, as you can see right here, you have the MACD show you a cross down here. So somewhere around here, it was already shifting and telling you that there's a change in direction. Something happened somewhere here, if you notice it, along with the break of the 50, 100, and 200-day moving average, that even MACD also dropped below the zero line cross. And as of now, it's showing us that this downward progression is the current theme and narrative of where the market is headed. So this is its downward path, and as of now, as of this downward cross also, there is no change in direction yet. And I just also want to mention this, that the shorter moving average right now is currently crossing below the 50 and 100 and 200-day moving average, which is denoting a stronger confirmation that the market as a whole is still bearish. And that being said, you have a large red candle right here, which from a short-term perspective, it tried to build its own short-term resistance here. And from a short-term perspective, also tried to build a support line here, which it failed to break the short-term resistance, which I just want to note also that if you'll try to analyze it from this perspective, was also spearheaded by this downward trending slope, which acted as a resistance as well. One thing to look at though also is this support level did not hold. So I think should selling continue, the next possible support level is the 6157 mark, which if you'll allow me to zoom out, this has been a support level that has held its ground since October last year. So please remember, this downward move here was pretty much because, if you remember, I'm not sure if you remember it. At some point last year, we went into a lockdown again. I think it was somehow a modified ECQ, which brought markets lower, and this was the downward move brought about that. And right after that, we had this breakout which happened around October. And for those who remember it, that particular breakout was pretty much because we had the vaccine already. There was an announcement that the vaccine would be available. And that caused the upward push boom right after that particular breakout. Then you had the cases start to increase early this year, and that's what caused the downward push. And we finally started to recover mid May when when lockdowns were starting to ease, and then we started to bounce. But as you can see right here, failure to break out from the 7,073 levels, what's bringing us to where we are right now. So the reason I raised that particular issue is this. This support level has held its ground last May. It held its ground also at the start of November, and let's see, no, if this particular news on the Delta variant is strong enough to break that particular support. Because if that gets broken, then I think, no, the possible area for it to retrace further will be around here. There's a narrative that we may drop further if the 6157 support level does not hold. So please take note of this support levels. If 6157 does not hold, your next support levels will be 6023 and 5824. So current support level is at 6157. Failure to hold that will be at 6023 and 5824. But if it breaks past that, or we see a narrative that the 6157 level will hold, then I think this is where the current move of the market will be. Allow me to erase this first so that mas malinaw, mas madali nyo siya nakikita. I do hope that this is something that's helping you and giving you value. I do charts like this because at the end of the day, I just want to help more people. I want you guys to learn more on how you can trade the markets with confidence. And I believe that technical analysis is one of the best ways for you to be able to at least have a glimpse of what's happening in the market as a whole. So let me fix this. So from this perspective, this is how it looks. This will be the current range for it. So should it hit 6157 and it actually bounces off of that, then the possible narrative of the market is you have a 6625 resistance level. So please do note this happened, the downward push happened over a few days only. So let's see how it responds as it attacks the 6157 support. Bounce from that 6625 resistance level will be something to watch out for. But if it doesn't, no, if it does not hold the 6157 level, I think there might be even longer and stronger downward strides for the market as a whole. And allow me to zoom out further to give you context. If I think we break down from the 6157 level, we may be forming, as you can see here, this is a high, this is another high, and then this is a low here. If we drop somewhere around here, then this might give us context of the market forming a lower. This might give us context that the market is trying to form some lower lows, which is indicative of a downward trending slope. So for those who attended our Stock Smart sessions, you know the progression when we see stocks move in this fashion. So there, I hope you guys got a lot from this, and allow me to just keep you updated on what's going on. Regardless of what's happening in the market, we're going to talk about it. And if you notice it, what's so interesting is that as long as you detach your emotions from this, it will allow you to actually think progressively. It will allow you to think based on the numbers, based on the math, based on the technicals, instead of just panicking or actually just buying out of emotion. Because at the end of the day, what will help you win in this is you don't follow your emotion and you follow your plan. And for those of you who want to follow your plan, we have Stock Smart's fundamental analysis happening this August. So most likely because of the pandemic, um, it seems that we're gonna do it online. And then technical analysis, we're having another one at the end of the year. The links are in the description as well. And if you want to learn via books, I've written 5 books about it, which is available via Shopee and Lazada. Check it out down below. And for those who want to trade US markets, we have Go Trade. For $1, you get to invest already in US markets. For cryptocurrencies, we have Binance, that for $10, you get to trade cryptocurrencies. And for those who want to dabble into Forex markets, check out XM below, because they're giving $30 for people who sign up, and you can use that $30 as a mechanism for you to trade as well. So that's it for now. Comment I'm learning if you are learning from this. Comment I stayed till the end if you stayed until the end. So that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.